Well, people, it's that time of the year where Goldman Sachs comes out with price targets for the S&P 500. In year-end 2024, they're predicting it's going to be at 4,700, which is pretty lackluster because that's only about a 5% gain or 6% when you include dividends. Nomura is out talking about a mild recession is likely to begin in Q4. They believe that the Fed has reached the terminal rates and continuing disinflation will convince them to keep rates on hold. You can actually see the federal funds rate is right here at 525, 550, where the probabilities of holding it here are darn near 100, with it kind of bleeding off to reducing rates there in May and June. And that's going to really depend on, obviously, yields, right? This has been doing a lot of the heavy lifting for the Fed as the 10-year yield has been obviously rising. But we did have a pretty big break on that CPI data. We recovered some of that today. But if this head and shoulders pattern plays out, we're looking at about a 4% to 4.1%. This was also published by Nomura that there's CTA buy triggers on the 10-year note futures. So if we can get above these levels, it might produce more potential buying, which would take us to a measured move around that 4% to 4.1% on the 10-year yield. We got a lot to discuss. If you're new here, welcome to the show. This is Stock Market Brief Show, where we navigate the financial markets through the lens of technical and intermarket analysis. We got key levels on the S&P 500. We're going to talk about a little bit about the Dow Jones and, well, this chart right here that was on the thumbnail. All that and more. Let's get into it. All right, people. So we did have quite a bit of a data dump today. Consensus for retail sales was minus 0.3% month over month. We came in at minus 0.1% month over month. United States producer price inflation, consensus was 0.1%, and we're down here at minus 0.5%. We already discussed Goldman Sachs year-end target, and when we really look at this, I mean, talk about an entire year and only moving right to here. That would be quite interesting, as we've been seeing a lot of market volatility these last couple of years. We had Atlanta Fed GDP Now model estimate for real GDP growth. It came in at 2.2% on November 15th, which is today, and that's up from 2.1% on November 8th. The dollar is going to be a very important asset to watch. You can see today we saw a little bit of a bounce, and the S&P 500 lost a little bit of its momentum, finishing slightly up on the day. This was a big down day in the dollar, so we're kind of bouncing a little bit from this level. We'll see if that move continues and gets wiped out, but overall, we saw a big move here. We saw a little bit of a reflexive bounce, and it followed through to the downside, and we're seeing something very similar as it stands at this moment. Going into tomorrow, we got all kinds of macro data drops. The important ones here to watch are the darker black, but I will say the auctions that have been taking place have brought a lot of market volatility, so that's going to be important to watch there. Got a lot of Fed speak. We have initial jobless claims and so much more. If you want to download this chart deck, you can do so in the pinned comment, or if you're watching this on Twitter, I have it on the thread. Going into tomorrow, we have not really much earnings taking place in the S&P 100, that is, but we do have Walmart prior to the open, which will discuss their expected move. Cisco Systems reported after hours today, and that thing took over a 3 standard deviation hit before bouncing up slightly. This was the expected move, and this thing came down to around 45, which would wipe out all of its yearly gains if it were to come down back to that level. Walmart reporting looks like a $6 to $6.14 expected move. We've been seeing some pretty large moves. The options market have been getting these wrong. So we'll see here if Walmart's going to come in opening around 164, if we're going to rip up even higher to 176. It is interesting to note that Walmart, this retailer, is sitting at 52-week highs, but Target, right? Target reported earnings, and while they were actually at like 52-week lows. This is one that we did talk about on the prior episode, I think down here, how we were putting in a higher low, and we're kind of bumping our head, moving into this area of resistance. And if you were to take that trade, the expected move going into earnings, it was only $8. It was give or take a little bit. So I personally traded up into this area, but I don't like holding my positions overnight into earnings. So I got a little bit of a win here. I sold the bulk of the position where I had a few remaining shares, and this thing moved $19 on an expected move of $8. So that was pretty lucky on my part. When I was looking at this, I was like, well, if we hit the lower edge of the expected move, that'd bring me down here for just a small loss, and I would have been fine with that because I took most of the profits here and I kept just a little runners on. So if you were to catch that, cool. Me personally, I don't hold full-size positions or big positions at all into earnings, so consider that one just a little bit lucky. For myself, if we take a look at the 11 sectors that make up the S&P 500, consumer staples led the way. No surprise there. We did have Target as part of consumer staples, right? So up 0.8%. Overall, though, pretty flat day, and you can see that here. VIX was up slightly, and all the index products were pretty much unchanged once again. Now, there was opportunities in this market. This right here is market net flow, and I show this sometimes. This is actually, one of the charts that you can pull up, X this. You can pull up if you're in the Discord in my swing trading community. You can type it in the query channel. I offer all kinds of stuff for that $9 a month. Ask around. I get so much data, including a watch list. Where's my watch list? This little channel right here, I put my watch list. Every week I give a tight list now, which is a bunch of names that are coiling up, which I like from a risk to reward standpoint. I got weekly, daily expected moves, etc. It's only $9 a month, or you can save even more by signing up yearly if you want to check that out. But go back to this market net flow and really look how we started the day. The red line, it was above the green line, right? So all puts versus all calls. That means to me, that's not really a place where you'd want to start really looking to go long. It's not my cup of tea personally. And the market started ripping up higher earlier in the trading session. And that to me, after seeing the market already rip so much and we're starting to see this happen, I'm thinking maybe it's VIX aspiration, perhaps, but I did not kind of fall for that for a very specific reason. And I looked for opportunities, which we discussed yesterday in Russell volatility, right? Russell volatility was up on the day while the IWM was up almost 5 or 6%, and it closed near the high, right? So it closed near the high. So of course, this looks like it could push a little bit higher, but how high can it potentially go to? And this is where I really like to look at expected moves. Now, IWM, it doesn't have a daily expiration, but it does Monday, Wednesday, and Friday, which happened to be today, Wednesday. So we came right into that daily expected move today at about 180.9 when I said, look at the market. It took it up, right? It took it up 6% here, and we're up like 1.6% here at a daily expected move with Russell volatility still elevated and market net flow. It wasn't really validating this move for me. And that right there was just a clear sign to at least throw in an intraday short position. So the reason why I'm telling you this is because you can make money by going against the trend, but I want just to remind you, it's much harder to do that. It requires much more patience, and it demands a significant amount more of attention. So it's all about really position sizes. And personally, when I short, I do use a lot less capital. So if I were to go to max short position, that's not even half the size of really my long positions, okay? So yeah, managed to catch some. I used TZA. This was I used my Fidelity account for this one. And then I also jumped into SOXS, which is semiconductor short. I'm out of the bulk of that position. So it's gone in gravy when it reached to around these levels. But that's something that you can look at, if you're looking at market net flow, if you're paying attention to this stuff, and then you're, incorporating the daily expected moves from a probability standpoint, right? 68% of the time, if you think of it as terms of distribution curve, right? It closes within the daily expected moves, and it's been a little off as of recently, but that's fine. Same thing with flipping a coin 100 times. You might have 10 times in a row where it lands on heads, but over the course of times, you'll start landing on tail streaks too, where it becomes that 50-50. Well, 68% of the time, it closes within the daily expected move. So we managed to catch a little bit of a win right there. Going into tomorrow, if we look at market DEX, the daily sum of deltas across the entire options market here, we are negative, which could mean that we have a potential down day. You can run the back test on this if you have TradeEtix account. That's where I'm pulling this specific data from. If you look at the flow map going into the 11/17 expirations, it's pretty half and half over here, so not much to really discuss there. Now, I want to call out the VIX expiration calendar because some things really do happen after we have the expiration of VIX, right? VIX has been kind of being compressed, right? It's been falling down, and now we're coming into the expiration, right? We just did. And I marked all of these dates, right? The next one, so we just had November 15th. The next one's going to be December 20th, okay? And if I show you this chart that was on the thumbnail, you can see here as we run up, like into VIX expirations, we've been seeing pretty nice rallies going into it as, volatility compresses. But then afterwards, we've seen some pretty big hits, right? That followed through for some rallies. This is, this is all for 2023. And then you can see we saw a hit here, we saw a hit here. Here we saw a little bit more of a down move and it ripped up. Over here we saw it move down. We saw it, ripped around. Over here we saw a nice move up, but it was faded with some more volatility. Over here just slightly more down. Here slightly more up, but then it started really going down. Same here before going up. And then we had a big hit here. We had a big hit here. And now after a big, as we had volatility really compress, or I shouldn't say compress, but we had volatility come off quite a bit. The market's been on a monster tear. You wouldn't know that the VIX is really coming off all too much with this type of a move. It is a monster move. And as VIX expired, looking back, this could potentially bring us to a period. It doesn't necessarily mean we crash or anything, but we could be entering into a period of consolidation very near future, and I'll point more out at that by looking at the gamma flip level. The gamma flip level is over here, right? That means we're in positive gamma territory for the SPX. It's at 4410, and as we're in positive gamma territory, that basically means what we see, what we've been seeing today, right? You have the market press up a little bit, they sell into it, and then as the market dips, they look to buy into it, and so forth. Now, when we're in negative gamma territory, dealers will buy into buying, so we get an exaggerated move to the upside, and then they'll sell into selling and get an exaggerated move to the downside. Now, I'll zoom in here to show you some key levels on gamma exposure levels going into tomorrow. So 45.15 is local resistance, 4,500 is local support, and those are some big gamma exposures. As 4,500 holds, price can potentially push away from that. Now, if we break down from it, price can push back down to say 44.90, or I'm paying a lot of close attention to the weekly expected move as price is still above that. And from a statistical standpoint, 68% of the time we close within it. Like I said, the coin flip scenario, we've been breaking it pretty often. So the options market's been getting it pretty wrong, but I want you to just pay attention to that number. And that's also, as of now, in line with the lower daily expected move, which is at 44.76. So if price starts coming down here into tomorrow, that could be a potential area where you might look for how to see how price action responds, and potentially buy the dip as we're in positive gamma territory. Now, if we start moving up to the upside, 45.15 is that gamma exposure level, and then we have another one at 45.25, and then past that is the daily expected move at 45.29. Now, I believe it's 45.50 is the bigger call wall. So we'll talk about that if price can get up there. Now, as we're pushing outside of this weekly expected move, understand that a lot of money goes into these expected moves, right? So this is the options market, forward-looking risk based off of implied volatility. So when you start breaking outside of it, right, dealers are hedging, right? Dynamic hedging takes place where you can get buying into more buying. So if we start really getting above these levels, we can start squeezing significantly higher. However, if we start breaking back down, say this 4,500, it could push us back down rather rapidly. Now, like I said, keep in mind the big level to watch as it stands at this current moment is 44.10. But as we know, as we get more data, those levels can obviously change. If you take a look at the SPY on the 15-minute time frame, I like to show the SPY because a lot of people like to trade the SPY. You can see we're outside of that weekly expected move. It's in line with the lower daily expected move. If you want these levels, I give them not only on this show all the time, but I also give expected moves, daily expected moves on SPX, ES, NQ, RTY, SPY, and Qs, and even IWM when it's available in the Discord group there too as well. But as if price does start coming back down to this daily expected move, that's in confluence with the weekly expected move, and that's also in confluence with the week-to-day anchored VWAP, which we have really yet to test. You can see we broke above, we hang out, we gapped way up on the data, macro data. So if price pulls back to it, look to see how price works around this area, because it could very well act as a potential bounce point. Now, if we start breaking down further, you can look at the 2 standard deviation. But overall, we're in positive gamma territory, and we're above an inclining 5-day moving average. So yes, at some point, this thing is going to have to consolidate, and it could be very well around the corner now, going into tomorrow, even to potentially next week, as we just had VIX expiration, and we have a big options expiration here coming up into Friday. Take a look at the NDX. We usually take stairs up elevator down, but you can see we've been taking the stairs down, elevator has been up, right? That's the saying on Wall Street, right? But this thing, we're talking, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 34, 14 trading days into the upper daily Bollinger Band. And it took 3 months, right, just to take us down from here into correction territory. So talk about a long drawn out process to move down here, quick shot up to the upside, and it's matching into right around this prior swing high. Now, this isn't necessarily one that I'd be looking to short as it stands, the NASDAQ 100, because there's been a lot of attention on these Magnificent Seven. That's kind of why I push myself more towards the Russell today, at least, right? So I'm, like I said, I'm tactical when I go about shorts. I don't typically hold them for too long. Today was just an intraday trade. So I'm not worried if it goes back down on me even further. It's not like I'm missing anything. There's always opportunities in the market. Now, I want to talk about the Dow Jones Industrial Average for a moment because this thing's also been on a ripper, haven't matched the prior high, but you can see we're outside of that daily Bollinger Band. The Bollinger Bands are expanding. Remember, markets move between expansion and contraction. You can see we contracted, they were tight. We expanded, they were wide. We contracted, they were tight. We're expanding once again. There's going to come a time where they start to contract. That is just how markets operate. Now, when I go into the 15-minute time frame, I did notice this on the DIA. We have that negative divergence on the RSI. We have negative divergence on the price momentum oscillator. We're above a 5-day inclining moving average, so that's bullish. But we do have a rising wedge structure here. Now, this doesn't necessarily mean it's going to be bearish and break down. If it does, look for a reconnect of the 5-day moving average and potentially the gap fill. The gap fill, if I look at like the SPX, that's where the gamma flip level is if we have that gap fill. So pay attention to that because that could be, these levels can act as a potential area of support when you fill those gaps. But back to the Dow Jones Industrial Average, there's really two stocks. It's 30 stocks, right? The Dow Jones Industrial Average has 30 names, but the big ones are Apple and Microsoft. So Apple and Microsoft are going to be very important to obviously pay attention to. If those start to give way a little bit, because maybe the 10-year yield rises or the dollar rises, that could potentially mean that we start breaking down for a little bit more of a consolidation. Like I said, we move between expansion and contraction, and right now we're coiling up very tightly. So I can see here in the next couple of days or so, we might see some volatility, whether to the upside spike or potentially break down in the Dow Jones Industrial Average. And being that Microsoft and Apple are the heavier weights there, those also control a lot of order flow in the S&P 500 and the NASDAQ. So it's going to be an important one to watch going into the remainder of the week, including just tomorrow. That's all I got for on today's episode, everybody. Have a wonderful night.